All right, so today we're going to do the deep dive into some seriously interesting, like economic data. We're taking a look at market analyst Year breakdown of this crazy jobs report.
Mhm.
And honestly, I think it took everybody by surprise, especially folks who were bracing themselves for a downturn.
Yeah, it's kind of wild, right? Like 1 minute everyone's convinced we're headed for a slowdown, and then bam, this jobs report drops and throws everyone for a loop. It really makes you realize how fast sentiment can change.
For sure. So Chiota really gets into the weeds with September's jobs report. And the biggest head scratcher has got to be those non-farm payroll numbers. I mean, they totally blew past all the predictions. What's the deal with that?
Right. And, for most people, those numbers translate to something pretty important. Jobs. A surge like this usually means more people are earning paychecks, which usually means more spending, which usually helps businesses grow and the whole economy chugs along. But Xiaotao, he kind of throws a wrench in the works. He points out some things in the data that, well, they make you wonder if there's more to this story.
And that's what I love about his analysis, always digging deeper. Like he points out this weird zigzag pattern with the unemployment numbers over the past few months. First, we see this sharp increase, and then suddenly it's like someone hit the brakes and it plunges. So what
Yeah.
gives? Well, his theory is that a bunch of new people might have recently entered the job market, maybe a lot of undocumented immigrants, and that's throwing off the numbers.
Yeah, it's definitely a theory worth considering, right? Because it could explain why people seem to be finding jobs, like the September data shows, but is it really going to last? Is this sustainable growth? Or are we just seeing a temporary blip that's masking some deeper issues? That's the million-dollar question, and we're going to unpack that a bit more in a sec.
Yeah, okay, so we've got this good news, bad news situation brewing. It's like finding a $20 bill on the sidewalk. Awesome, right? But then you flip it over, and it's got this weird stain on it. You're not sure if you should be stoked or a little suspicious.
And that's why understanding how unemployment is measured is so crucial, because it's not as straightforward as you might think. It's not just about counting how many folks are out of work at any given time. There's a lot of nuance there. Like, for example, if someone just totally gives up on finding a job or goes back to school, they're not included in the unemployment rate anymore.
Ah, so even if they don't have a job, they kind of disappear from the statistics. Tricky.
Exactly. So when you have something like what Xiaotao describes, this potential influx of workers, it can really make those unemployment numbers dance around in a way that's hard to decipher at first.
Gotcha. So you got to look beyond the surface, right? Kind of like with those optical illusions, what you see isn't always the whole picture.
Exactly. And to make things even more complex, we're talking about what economists call lagging indicators. Think of it like this. You slam on the brakes in your car, and then you look at your speedometer. It's still going to show you how fast you're going a second ago, not what to expect next, right?
Right.
Yeah.
So it's more of a rear view mirror than a crystal ball.
Uh,
Okay, I get it.
yep, that's the jobs report in a nutshell. It reflects the recent past, not necessarily a guarantee of what's to come. So even with this surprisingly strong report, we got to remember that turning the economy around is like steering a giant ship. It takes time.
Makes sense. And this is where Xiaotao's insights are so valuable. He doesn't just take this one report at face value. He's cautious about declaring victory just yet and urges everyone to look at the bigger picture, considering all the other economic signals out there.
Absolutely. He's basically saying, hey, don't break out the champagne just yet, folks. And he's right to do so. Because like we were saying before, there are definitely other indicators that suggest some underlying weaknesses in the economy that we can't just ignore.
Like those flashing warning lights on your car dashboard.
Exactly. You can't just ignore those no matter how smoothly you think your car is running. You gotta investigate. It's like you're trying to steer through fog.
Yeah.
You've got your instruments, sure, but there's always that element of like, what's lurking out there?
And I got to say, this jobs report,
Yeah.
total curveball. But you want to talk about freaking out, let's talk about the bond market. Even those guys, and they're supposed to be the pros, seemed caught off guard.
Well, think about it. The bond market thrives on reacting to anything and everything, especially when it comes to the economy. And this report, this was a big one. See, before this, you had a lot of bond investors essentially betting on the Fed slashing interest rates even further, like putting money down on the economy, kind of tanking.
Yeah, and who could blame them? I mean, we had all this craziness, global slowdowns, trade wars, you name it, enough to make anyone nervous, eh?
Oh, for sure. It was like everyone was bracing for impact, and then boom, this jobs report dropped out of nowhere, and suddenly bond yields are doing backflips. Like everyone who yelled, "Fire!" in a crowded theater realizes, oh wait, it was just someone lighting a cigarette.
Okay, so maybe a slight overreaction, but it definitely highlights how much uncertainty there is around the Fed's next move, right?
100%. It's crunch time for them now. Do they look at this jobs report and think, okay, things are looking up, we can chill on the rate cuts, or are they going to stick to their guns and keep slashing, worried that this whole thing is just a fluke?
Right, right. Because for those of us who don't speak fluent bond market, what's the big deal with all this interest rate drama? Why should we care?
Okay, so imagine interest rates as like the gas pedal and brake pedal of the economy, right? And the Fed, they're the ones with their foot on those pedals. When they slam on the brakes, meaning raise interest rates, it gets more expensive to borrow money. That usually slows things down, cools the economy off a bit. But when they ease up, lower those rates, borrowing becomes cheaper, and it can give the economy a much needed boost.
So they're walking this tightrope between, like, keeping inflation from going nuts and making sure we don't end up in a recession.
Exactly. And here's why you should care, even if you're not a Wall Street wizard. Interest rates impact pretty much everything. Think mortgages, car loans, even just using your credit card.
Right.
Higher rates equal higher costs for all that stuff. So yeah, it can put a real dent in your wallet if you're not careful.
So basically, paying attention to these interest rate decisions could save us regular folks a lot of headaches down the line.
100%. And this is where, going back to Zhao Tao, remember how he was urging caution, saying don't read too much into just one data point, even if it seems like good news?
Right. He's saying one sunny day doesn't mean winter's over.
Exactly.
Because, like, hold your horses, everyone. Don't get ahead of yourselves.
Right. And you know what else is interesting? Going back to Zhao Tao's theory about all those new workers potentially messing with the jobs numbers. What if that's just temporary, you know? Like, what happens if those numbers start to level out or even, like, go in reverse in the next few months?
Yikes. Okay. Yeah. That's a thought. It's like that saying, one swallow doesn't a summer make, right? Or I guess in this case, one good jobs report doesn't mean everything's magically fixed. It really makes you think.
Totally. And I think the big takeaway here, and it kind of goes back to what we were saying earlier, is that we got to be careful about jumping to conclusions. The economy, it's messy, rarely gives you a straight answer. So reading those reports, like, you got to be the detective, right? Look for the clues, connect the dots, but don't just take everything at face value.
Yeah. Be your own economist, in a way. Question everything.
Exactly. And that's what I appreciate about Xia Tao's analysis. He's not afraid to ask the tough questions. He challenges the usual assumptions. And, you know, he's always learning, always refining his understanding as new data comes out, which honestly is something we should all be doing.
For sure. Stay curious.
Yeah.
So I guess what I'm taking away from all this is even when things seem good, like with this jobs report, it's still smart to be a little cautious, you know?
Yeah.
Think about those what if scenarios. Like, what if those numbers start to look ugly again next month? What happens to interest rates then? What happens to, like, our own finances? Because at the end of the day, the more informed we are, the better decisions we can make for ourselves.
Couldn't agree more. Being prepared, staying informed, that's how we navigate whatever the economy throws at us.
Exactly.
Right.
So keep asking those questions, folks, and stay tuned.